Okay, so you're thinking about gold, maybe adding it to your investments, which, makes a lot of sense.
Hmm. It's often seen as that safe harbor, right?
Yeah,
Especially when markets feel a bit uncertain.
exactly. But like any treasure hunt, you've got to watch out for, well, fool's gold. And that's precisely why we're diving deep today.
Yeah.
We're using Doug Young's article, How Can I Avoid Gold Investment Scams? It's our guide, really.
Good one.
Our mission today is pretty simple. Give you the know-how, the tools to navigate the gold market safely, spot those dodgy deals before they spot you.
Precisely. And Doug's article is like a fantastic cheat sheet for investing smartly in gold.
Yeah.
We're going to break down the key steps he talks about.
Okay.
Like making sure your transactions are solid with a trustworthy people, and how to recognize those classic scam signals, the ones that should, make you pause.
Right, those red flags.
Exactly, red flags. Also, why doing your own homework, your own research, is just non-negotiable.
Yeah.
And crucially, where the reliable places are to actually buy gold. Plus, getting a handle on pricing, how that works.
The spot price and all that.
Yeah, spot price premiums. And the wisdom in sticking with sort of the traditional forms of gold.
Bullion bars.
Bullion bars, exactly. And finally, just making sure what you're getting is real and that the transaction itself is secure. It's all about empowering you, the investor.
Okay, so let's start right there at the beginning. Making sure you're dealing with honest players.
Mm-hmm.
Doug really hammers this home, verifying sellers and their claims. What are the absolute must-dos here?
Well, Doug stresses, and this is critical, the first step is to thoroughly check a seller's credentials. Confirm their licenses.
So don't just take their word for it.
No, absolutely not. You need to actively verify. Are they registered with the right regulatory bodies? Do they follow industry standards? He also strongly recommends digging into reviews.
Yeah.
Testimonials from other buyers, like getting the inside scoop. What was the experience really like dealing with this seller?
That's such a good point about reviews. Like checking out a restaurant before you book, but, with potentially a lot more money on the line.
Exactly. Your hard-earned money.
And Doug also talks about getting really clear, upfront info about the gold itself. What specifics should we be pushing for?
Transparency. That's the key word. A legit seller should have no problem giving you detailed specifics, like the exact weight, the purity level, that's the fineness, basically the percentage of pure gold, and of course the price.
Seems straightforward enough.
It should be. If a seller is vague or they hesitate or they just can't give you straight answers, that's an immediate red flag. As Doug puts it, pretty directly actually, if the seller is unwilling or unable to provide detailed information about the gold, walk away from the deal.
Okay, simple as that. Walk away.
Hard to argue with that advice.
No mincing words there. Right, so then Doug shifts gears a bit, helping us spot the danger signs, those blaring alerts that something's just not right. What are some typical red flags he points out?
He highlights several really critical ones. First, be extremely skeptical. I mean, really skeptical of any promises of guaranteed sky-high returns.
Get rich quick promise.
Exactly. Gold is generally seen as a stable, long-term thing. Maybe protection against inflation. It's not a lottery ticket. So if someone's painting this picture of unbelievable profits, fast, alarm bells should be ringing loudly.
Okay, what else?
Second, be very wary of high-pressure sales tactics. The buy now or lose out forever kind of pitch.
Ugh, yes. Those always feel off.
They are off. A reputable dealer gives you time, space. You need to do your research, make a considered decision. If you feel rushed, pushed, it's a strong sign they don't want you thinking too hard.
That's really valuable to know. That feeling isn't just you being cautious. It's a genuine signal to step back.
What else? What other flags?
Well, Doug also mentioned sellers who give vague or incomplete info, which, we touched on with transparency.
Right.
And maybe this sounds a bit weird, but be suspicious of prices that seem too good. Too good to be true.
The super low discount. Yeah. Everyone loves a bargain, sure. But if someone's offering gold way, way below the current market spot price, it's highly likely it's fake or part of some scam. Gold prices are pretty consistent globally, right? Tied closely to that spot price.
So a massive unexplained discount should make you very suspicious.
Very, very suspicious. Cautious, at the very least.
Right. That old saying really does ring true if it seems too good to be true. It probably is, especially with gold prices being so closely tracked. Okay, spotting red flags is crucial, but Doug also really emphasizes proactive research. What does that due diligence actually look like in practice?
Research is your best defense, really. Doug stresses verifying credibility by checking those online reviews and testimonials again,
Hmm.
seeing what other investors have actually said. It's incredibly valuable.
Okay, beyond reviews.
He also advises verifying the seller's business registration, their licenses, check with the relevant state regulatory agencies or financial oversight bodies. Does this business actually exist legally? Are they following the rules?
So, confirming they're legit on paper.
Exactly. And finally, make sure to look for any complaints filed against the seller. You can often find this through Better Business Bureaus or consumer protection agencies. A pattern of complaints. That's a major warning sign. Don't ignore it.
So it really sounds like putting on your detective hat is a must before you invest any money. Okay, so if we've done our homework, where should we be buying gold to minimize these risks? Doug gives some solid recommendations here, doesn't he?
Absolutely. He recommends sticking with established, trustworthy sources. Makes sense, right?
Yeah. Like who?
This includes reputable online dealers, ones with a solid track record, good reviews, detailed product info, the stuff we've been talking about.
Yeah.
He also suggests established brick-and-mortar stores, ones with a long presence in the community. There you often have the advantage of physically inspecting the gold before buying.
Seeing it in person.
Right. But Judd suggests that probably the safest routes are government mints and their authorized dealers.
Like the U.S. Mint.
Exactly. The U.S. Mint, the Royal Canadian Mint, places like that. These institutions operate under strict rules, and they offer high-quality, authenticated products. Less guesswork involved.
Those definitely sound like much safer bets than, say, taking a chance on some random website you just found.
For sure.
Now, price, obviously a huge factor. Doug talks about understanding market prices. What are the essentials we need to get our heads around?
Okay, grasping the concept of the spot price of gold is fundamental. This is basically the current benchmark price, what gold is trading for right now on the global market.
And you can find this easily.
Oh yeah, easily. Just look it up online on financial news sites or commodity tracking sites. Doug advises always comparing the seller's price to the current spot price. Make sure you're not being significantly overcharged.
Right. But sellers add a bit on top, don't they? A premium.
Correct. You need to factor in premiums. Sellers add this margin above the spot price to cover their costs running the business, handling insurance, and, well, to make a profit.
And these premiums vary.
They do. They can vary from dealer to dealer, sometimes depending on the specific product, too. So it's smart to compare premiums from several reputable sources before you buy.
Okay.
And finally, Doug suggests just becoming generally familiar with price trends, patterns in the gold market. Not trying to perfectly time the market, he advises against that, but just having a general sense of context.
So it's about knowing the baseline value, the spot price, and then understanding the legitimate extra costs involved in buying from a dealer.
Yeah.
That makes sense.
Mm-hmm.
Doug also has a pretty clear recommendation of the form of gold to invest in, right? Not all gold products are equal in this sense.
Yes. His advice is pretty straightforward. Stick mainly to traditional, easily recognizable forms, bullion, coins, and bars.
Why those specifically?
Because they're widely accepted, they have standardized weights, clearly defined purity levels stamped right on them usually, and they're generally much easier to verify for authenticity. Easier to resell later, too.
Okay. What about rare coins, collectibles?
He specifically cautions against getting into rare or collectible coins unless you really know what you're doing, unless you have significant expertise in numismatics coin collecting.
Why the caution there?
Because their pricing can be much more subjective. It depends on rarity, condition, collector demand, not just the gold content, and they often have lower liquidity compared to standard bullion. Harder to sell quickly if you need to.
That makes perfect sense. Keep it simple, keep it verifiable, stick to the basics like bullion.
Pretty much, especially if you're primarily investing for the gold value itself.
Okay, last piece then. How do we make sure the gold we're actually buying is genuine and that the transaction itself, paying for it, getting it delivered, is secure?
Right, ensuring authenticity. It starts with buying from those reputable sources we already discussed. They often provide certificates of authenticity.
Certificates.
Doug also suggests considering getting your gold independently appraised, especially for larger investments. Just an extra layer of verification.
By a third party.
Yeah, an independent expert. Also, look for the official hallmarks and stamps on the gold items themselves. These indicate purity, the mint, or refiner. Learn what those look like for common products.
Got it. And securing the actual transaction. paying and shipping.
He advises being really cautious about payment methods with limited buyer protection. Things like cash, wire transfers, maybe even crypto when dealing with someone you don't know well.
Wow.
Because if something goes wrong, it's much harder, sometimes impossible, to get your money back. Credit cards and established online payment platforms like PayPal, perhaps, often provide more recourse if there's a dispute.
Better buyer protection.
Generally, yes. And for delivery, always insist on insured, trackable shipping. You need proof it was sent and protection if it gets lost.
Makes sense. And once you actually have the gold.
Then you need to think seriously about secure storage. Options like safe deposit boxes at a bank, or maybe professional vault services for larger amounts. Don't just, hide it under the mattress.
Right, probably not the best plan. So it's really a layered approach to security, from checking the seller up front, verifying the gold, using safe payment, secure shipping, all the way through to secure storage.
Exactly. Each step adds a layer of protection.
Okay, wow. We've covered a huge amount of really practical advice there, all thanks to Doug Young's insights in that article. If you had to boil it down, what are the absolute most critical takeaways you'd want our listener to walk away with?
Okay, the absolute essentials from Doug's article, if you're thinking about gold. Number one, always, always thoroughly research the seller. Verify those credentials. No shortcuts.
Right.
Two, be extremely wary of those exaggerated promises. Guaranteed high returns. Big red flag. Same for high-pressure sales tactics. Don't be rushed.
Compare the price.
Three, yes, always compare the price you're offered to the current market spot price. Understand premiums. Four, stick to reputable, well-established sources. Government mints, authorized dealers, long-standing retailers.
And the type of gold.
And five, generally, keep it simple. For most investors, sticking to traditional forms like bullion coins and bars is the wisest, most verifiable path.
That's incredibly valuable guidance. Super clear. And it feels particularly relevant right now, actually, because Doug Young, in the article, he points towards a bullish outlook for gold in 2025.
Yeah, he does mention that.
Which suggests we might see more activity in the gold market, more interest, both legitimate and, unfortunately, potentially more scam attempts trying to cash in on that interest.
That's a very good point. Increased interest can definitely attract scammers. So staying vigilant, applying these principles we've discussed is absolutely crucial right now, maybe more than ever.
Definitely.
Exactly. And maybe this whole deep dive into avoiding gold scams should prompt a broader thought for you, the listener. Given the potential for fraud, even in a market like gold, which many see as solid, what other investment areas, even ones that seem secure, might also need this same level of careful scrutiny, this level of due diligence?
That's interesting, applying these ideas elsewhere.
Yeah, think about how these core principles, really researching who you're dealing with, being skeptical of promises that sound too good, relying on trusted, verified sources. How could those apply across all your financial decisions? It's worth considering.